Homes in my market of Surrey, BC have just dropped $50,000 in a single month, proving me right again. Told you so, because I continue to view the coming months as only putting more downward pressure on real estate prices as demand dwindles because of interest rates topping 20-year highs. And supply has increased 16.6% since the same time last year. But at the exact same time, I'm preparing to purchase my next investment property because Canada has just announced that they are trying to stabilize immigration at 500,000 new people per year by 2026. And although that does sound like a massive increase of the pre-pandemic levels of under 300,000 people per year, in fact, stabilizing immigration at 500,000 people actually means that Canada's current government needs to cut last year's immigration numbers by half. And all this means that we will only be short by just a hair under 6 million new housing units by the end of the decade. So sure, prices are dropping, but don't count on that in the long term because real estate is a long-term investment. And I'm going to show you exactly what the Fraser Valley market is doing by covering listings, sales, prices, and inventory. But since indeed the Fraser Valley Real Estate Board just released their latest statistics package, that makes this the Surrey Report. So here is my amazing team with the current house prices for the city of Surrey.
In townhouses, benchmark price is around $876,000. Now that's a 0.8% decrease month over month, but it's a 6.2% increase year over year.
Looking at our detached market, we had 145 sales in the month of October. That is up 12.4% from the 129 sales in the same period last year. Our benchmark price is $1,646,400. That is down 1.5% month over month and up 4.2% year over year.
And in condos, benchmark price is around $535,000. Now that's a 0.8% decrease month over month, but a 2% increase year over year.
Well, there you go. Month over month down, year over year up. And that seems to be the story across most of the market from October. But before I jump deeper into this month's stats, if you are new to the channel, my name is Steve Karish and I sell real estate here in Surrey and the Fraser Valley of British Columbia. So subscribe to the channel if you would like to stay up to date on the market, and go ahead and click the like button so more amazing folks like you can find this local real estate channel. And of course, if you are looking to sell before the market dips, or if you see the long-term perspective and are thinking about a way to buy another investment property like I am, you can book a call with me right now using the link in the description below at a time that works best for you. And now let's do a deep dive into the Fraser Valley Real Estate Board statistics package so you can see exactly what's going on. And yes, if you are interested, I have linked this stats package down below in the description of the video so you can look up your specific area and asset class in case I gloss over it. Yeah, you can find actually this full statistics package. This is a public website, public information for everybody. You can go just to Fraser Valley Real Estate Board or fvreb.bc.ca/statistics and you can find this dating back, over a decade now. Now, when I go to the stats package, what I focus on first is the grand totals of the month. And when we're looking at the number of sales in October were up since last year. I don't know if you remember last year, but last year was a really, really, really slow October. This October was pretty slow as well, except we're seeing 7.7% more sales than this time last year. However, we're seeing a drop of basically 12% since September. September is usually a very busy market. This September's was not that busy. And unfortunately, October went in very much the same direction. New listings, however, are doing very much the same thing. We're seeing only 2,500 new listings come to the market. That was actually up from this same time last year. Last year, again, was the absolute doldrums of the market, but September saw many more, so we're starting to see that decrease in new listings coming to the market, as we expect to happen in October, and then there should be again less in November, and again less in December. But active listings have crept up to 6,580. Now, this does include a bunch of listings on the MLS system that aren't going to show up in your actives every single day, like, for instance, rentals. So this number is actually artificially high by about 500, but thankfully that number is up from this time last year when we saw 5,600 listings on the market, and it's basically even with just last month. Average price, however, since last year has gone up 2.9%, and it did come back just a hair under 1% across the whole board area from what was just over $1 million last year to now $994. Next up, let's focus on the year to date. So this takes into account the whole year up until this point. Sales in 2023 have been just under 13,000. 2022, we have seen more sales, so we're down 5.4%, but the new listings coming to the market are less than this time last year by 11%. But last year was an insane year, particularly the first quarter before interest rates started to increase, and we saw just a ton of sales happening at that time. Next, we're going to look at each asset class across the entire Fraser Valley. Now, if you're unfamiliar with the Fraser Valley, it includes North Delta, the city of Surrey, which is actually broken down into multiple places because it's so big, the city of White Rock, city of Langley, the township of Langley, Abbotsford, and Mission. I know on this video every single month I get requests for Chilliwack and Maple Ridge. Unfortunately, guys, sorry, that is not within my real estate board area of which I am a member, although we do service those areas with about 30% of our business each year. And you're going to notice this trend as we go through everything. Since this time last year, almost everything is up. And since this time last month, almost everything is down. That's true with sales. From this point last year, again, it was really, really tough at this point last year. We're up 9% and down basically exactly the exact same number since this time last month. New listings doing very much the same, but this is what I like to focus on. Benchmark price is the best indicator of price, and in detached homes, the benchmark price since last year is up 5%. It doesn't feel like it should be, but remember, we saw that massive decline last year from about April through till September, and year over year, we're up 5%, even though we're down 1.5% since just last month. Now, normally these numbers don't often track between average, which is an okay metric, median I don't like at all actually, and then the benchmark price, but right now they seem to be tracking. And the reason I don't like to track them that way is you can tell here, the actual market is reflecting that it's up about 5% year over year. But if you look at specifically average price, well, it's saying that we're up 10%, and I just don't believe that to be true. Townhouses buck the trend a little bit across the marketplace. We're looking at fewer sales this month in October than we saw in both last year, October. New listings are up over last year, and they are down over last month, but active inventory on the market is also down. Townhouses are not as readily available as they were this time last year. It is our hottest asset class at the moment. They are up ever so slightly over September. Now, townhouses is a space that we are seeing really affecting the people. This is where most working class families are being pushed into, just because look at how crazy these prices are. $848,000, $845,000 for your typical townhome across the entire Fraser Valley. It is most affected by interest rates for working class people. The detached side is much more affected by interest rates for investors because we have a higher amount of investors that own detached homes in Surrey and the Fraser Valley than we do in other asset classes. But we are starting to see the investors try to bail out of the condo market across the entire Fraser Valley. Now you're seeing a healthy amount of condo sales compared to last year, slightly down from last month. But look at these new listings coming to the market, up 18% since last year, and the active inventory as a whole is up 12%, making that a very, very good thing for first-time buyers and I guess investors if you're thinking about getting into the market. There's a lot more to pick from, and that is starting to show, although not really yet in price. We're still up again year over year, 3.7%, and we've just come down a little tiny bit in condos. But condos are really hard to bring down prices in because they're a low asset class. You have a lot more buyers trying to buy them, and it's a lot easier to bring, for instance, a $1.9 million detached home down to 1.7 than it is to get a $200,000 drop, obviously, in a $500,000 condo. Now, as I mentioned, Abbotsford, if you want to take a look at those numbers, I'm not going to focus on them here because it's a very small market compared to where most people are watching this video from, but the link is down below if you want to take a look at them. Abbotsford, Mission, White Rock, Langley is also included in this, North Delta as well, but we're going to focus here on Surrey. Now, these particular numbers right here are the ones that my team read out earlier, and you can see that the story is very much the same, up 4% year over year in detached, 6.2% in townhomes, and 2% in apartments, and then down when you look at month over month. A couple of outliers to point out to you. Cloverdale townhomes have not dropped at all since last month in benchmark pricing, but they have in average. And North Surrey townhomes appear to be increasing, bucking the trend of the rest of the Fraser Valley marketplace. Now, this is one of the charts I really like to pay attention to because it shows you what the market is doing against itself. So the actives is this kind of light blue in the background. So the overall amount of listings that are on the market, and you'll see here that we were still creeping up, which is unusual because if you actually draw a line down, you'll find that the top of the market in each year over year is usually sometime between May and July. So we are seeing that inventory creeping up, again, causing prices to drop down. I do expect that that will turn around for the end of the year. But at the exact same time, the number of new listings has already peaked downwards. So you're starting to see that trend as well. By the way, this active listing thing, we're just over 6,000 now at this point. And way back in the day, we were over 12,000. We were over 11,000 for sure for many, many years in the Fraser Valley. And that was a really tough time, that 2008, 9, 10, 11, all the way up till 2015 when the market really started to see that crazy activity. People forget that 2019 was actually a really, really tough year, way harder than this year, so something to consider there. But then we're seeing the new listings coming to the market trending downwards, and then we're also seeing the sales trending downwards as well. If you're into consumption rates, this 15% consumption rate, I know the Fraser Valley Board and the BCREA, what they like to do is they like to say that's still a balanced market. Personally, I think that that's creeping right into the buyer's end of things, and that is showing up in the month-over-month pricing coming down. But in relatively a very good spot. Again, look back at 2009 and how low that consumption rate dipped. 2013 was not good. Again, this is kind of right at the beginning of the pandemic when nothing sold for about a month and a half, and we're not there yet, although we are headed in that direction. And because I am a visual learner, one of my favorite graphs is the HPI broken out. The red line is detached, so you can see we have made the curve and we did peak out in about July this year. Townhomes, though, are really holding firm. Seems to be a lot of desire to be in that type of product. Again, I think that comes back to just the affordability and the fact that if you got two kids, you can still raise them, although it might be more cramped than you like in a townhome. And then the condos, although it did dip ever so slightly, it seems to be pretty resilient right now also. And then the last graph I like to check every single month, and this isn't super relevant because it's just average detached price, and I'm not a big fan of average, is the detached average price since 1979 when they started tracking it in the Fraser Valley. Just so you know, this little bump down here was the end of the world in 1981 when home prices slashed in half. Yep, that tiny little guy down there. We had the 1990 crash. We had the 2008 crash. The 2022-2023 crash was the largest of them all. And I do expect that we are going to see some more downward pressure. However, I don't expect it to fall off anything like it did this time last year. So there you have it. The market is slowing, and buyers should be quite excited about it, but they aren't because borrowing costs are so much more expensive than they were this time last year, and definitely than they were a couple of years ago. Opportunities are starting to come to the market. And I think December right now for a lot of people is showing promise to look like some really good deals moving forward in the future, particularly if you are considering or have the ability to upsize from, say, a townhome or a condo into a detached home in many areas of the Fraser Valley. Let me know what you think down below in the comments. And remember that you can book a call with me if you need help with your real estate here in my market of Surrey and the Fraser Valley. Remember to subscribe, click the like button, and we'll see you in a couple of days.